No, I keep telling these people. Keep telling these people. Yeah, no. The tech, I said, yeah, no, that's what I said. I said the tech sector. Yeah. Right after Bando, you see Tesla. Yeah. What kind of thought you want? What? Are you and the big girl? Hey, baby. Hey, no, you know we'll do what to do with it. Hey, hold on. Hey, let me get back to you, bro. All right. Hey! Well, hello, family. Hello. Welcome back, guys. My account greener than a bean, and hopefully yours is too. Listen, we got some good information. Obviously, tech sector running up out the bandigial. We got some stuff to go over, not only with our Tesla stock, but also some future things that y'all might want to keep your eyes out. Like I said, I'll be calling before it go crazy, so you know it's real over here. But before we tap down on that, guys, we got two things that we got to do. One, we're going to be watching a video here with Barry and Insight, basically talking about what I've been saying the whole time, tech, with a little bit of tech, and tech, because that's what's going to carry your money through all these hard times. Secondly, cue that wind effect. What you thought it was? Yes, sir. You know what time it is. All right, bring it in, guys. Let's get down to it. Let's get a little... I don't know what I'm gonna say. Let's push.
After nearly a year, the S&P 500 finally entering a bull market
Bulls.
despite persistent inflation, rising interest rates, and recession fears. How do we get here, and can the market rally be sustained?
And similar to what I said, guys, prior to the week, and even before with last month, all this FUD, Warren Buffett said it best: when others are fearful, be greedy; when others are greedy, be fearful. I myself was like, damn, this is I don't know what to do. And when I saw that, I said, hold on, B, this is the time to invest. I said, Tesla, don't try to time the best one. Did I find Tesla valuable at 120? Hell yeah. Did I find Tesla valuable at 150? Hell yeah. That's what I bought. That's what I was buying. Now here we are rising up 250, right? Where people are like, and you're missing the fold because you were so flooded out. Another correlation. As a boss, guys, you got to learn to be able to take some of the loss. I had to take some of that loss in my AMC portfolio so I could move my money and put the mass majority of my stuff into plays that are already recouping, but I know that they're going to be long-term foundations for all the way down 10, 20 years. This is small. This is minute. These papers are relevant anyways. Anything that you have lost, one, we're going to earn it back over here with the Money Mafia. But two, you can go out and get more money, more hustle, more things. That's not something where I'm going to sit up and miss more money because I'm scared to lose a little bit of this money. That's, that makes sense to me. But let's tap down into it.
It's the Barron's cover story this week. So, Ben, I guess that's why they call it a wall of worry, right?
That's right. I mean,
you
entered this year and everyone was terrified. They were terrified of a recession.
Apple, Amazon.
Come on now. Come on.
Be sustained. It's the Barron's cover story this week. So, Ben, I guess that's why they call it a wall of worry, right?
That's right. I mean, you entered this year and everyone was terrified. They were terrified of a recession, and they were frightened of the banking turmoil. We had the debt ceiling, and yet the market has gone to a bull market. And that's really because of big tech stocks, which benefited from the fact that they became defensive plays, as Carlton has pointed out. They make a lot of money, and when you're worried about stuff, that's where you want to go. And they also benefited from AI. It's become a big innovation. Everyone's looking to big tech and saying they're going to get a lot of money off of this. And so you end up with investors seeing that, and they buy these stocks, and they're so big, they push the index up without anything else really working at all.
But who needs artificial intelligence when we have Andrew Barry here, who on this show in January predicted that tech stocks would do really well this year despite everybody's fears? I think we have a clip of that.
Up there.
In tech, I keep it simple and stick with some of the mega caps this year. I think Apple, Amazon, Alphabet are all look pretty good. They're down 25 to 50% in the last year.
Throw that NVIDIA in there. I love how you missed that.
Getting more attractive.
And that Tesla.
Well done, Andrew. Are they still attractive
Why don't these people like to say Tesla?
You know what? I think Alphabet's still pretty attractive. I'd be cautious.
That's how you know you need to buy a Tesla.
Apple's around 180 now. It's gone from trading to 20 times earnings at the start of the year to around 30 times earnings now. I think it's getting a little bit rich right now, almost a $3 trillion market value right now, and not a lot of growth there right now.
Okay, Ben, do you think that this is sustainable even with tech valuations elevated?
I actually think it is. I mean, there are really two ways this market can keep going up. Tech stocks could get more expensive and people could just keep buying them, and that keeps carrying the market higher. But you could also see the rally broaden. I think that's what's happening now. We see that with the outperformance of small caps this week. We saw it with also the RSP, the equal-weighted S&P 500 ETF, which gained 1%, which is more than double the S&P 500. And if you keep having the market broaden out, and there are good reasons for it to do so, including stronger earnings growth, then you could see this market continue to go higher, even if big tech treads water.
All right, so Carlton, what if people aren't comfortable paying 30 times earnings for stocks that everybody loves?
Like I said, guys, tech is the catalyst of a bull rally. The stock market is moving independent of the economy. Now, don't get you wrong. This money that's running up, this off of tech. The economy is still in shambles. Like, outside is not better. You know what I'm saying? I know that everybody's, I bet you that Fed hike.
They look for some good values.
Yeah, exactly. A lot of stuff is on sale. So, I mean, when you saw tech marching forward earlier this year, the main laggards were energy and financials. Of course, we understand what was going on with the financial sector, especially the banking turmoil that we saw back in March and April.
Yeah, you had to,
and one way to play this is
throw
do
all
the
the damn
index
line.
again, the KDE.
It is still going on.
Also, a lot of these stocks are looking a little bit undervalued right now. And
just financial advice. You go in the banking sector trying to put your money down for long hold, you're getting smashed. Yields, you're getting smashed. This is frivolous. They need that money in the sector to try to help with the SWIFT, guys. That's why they keep pumping it. You want your money made? It's Tesla, Nvidia, XRP, Bitcoin, Apple, Microsoft, Rumble, Path. What am I leaving off here? What's another big name banger that I love? Soon enough, I got some more that I'm putting some recommendations, but like I said, we'll get that after.
I think they're definitely oversold from where we are. They do have headwinds ahead of them, but they're looking good. The other thing to look at is energy, because demand is not going down.
And the Tesla fanboy said
much better than they were years ago.
And also, you got a really nice dividend on that energy index, right?
Yeah, I mean, even on banks as well. I mean, you're looking at dividends now in excess of 4%, so definitely not a bad place to be.
And a better tax deal than if you buy bonds at that level.
Exactly.
So you know what? There's too much good news here. Ben, throw a wet blanket on it. What should we be worried about?
Well, I think the worries that we have are really the same as when the year started. It's about the economy. The economy is still weakening. We're seeing it in the job market now that it's just not as strong as it used to be. We're also seeing it in possibly earnings. I mean, that's the place where if you look at Morgan Stanley strategist Mike Wilson, he's saying that the market is too optimistic about earnings. Analyst estimates are too high. We're actually going to see a big drop, and that could take the market down to 3,700. And then you have the Fed. Everyone expects this pause, but the Fed decides, you know what, we don't really want to pause. That there's too much inflation here. I think that could really cause the market to take a breather.
Yeah, but I think the important thing to pay attention.
I don't know how they get these expectations for pauses. Didn't Jay Powell? Where has Jay Powell told y'all this? I just don't understand.
Your time, the amount of time in the market. I mean, yes, all of these things are headwinds. All of these things can take the market lower. But do you need the money today, or are you a long-term investor? Because always pay attention to what's going on. Pay attention to the headlines. But I don't think in these volatile times you necessarily want to go all in cash or something else. Stay in the market, but just be mindful of what's going on, because that has actually proven to benefit over the longer term.
And
putting your money at the market, you lose.
$5 trillion or so parked now in money market funds. People are liking that 5% right now. They're getting on their money market funds at 4%, but the stock market's doing a lot better. Money market fund yields could be headed lower if the Fed starts easing by the end of this year.
Good ball
Andrew,
here.
David Kelly mentioned international stocks looking attractive. You agree?
Yeah, I would agree. I mean, they've underperformed for 10 years. They're having a very good year this year. Japan is the top major market in the world this year, up around 20%. And as he pointed out, a lower dollar and lower valuations and high dividend yields overseas could mean that they will outperform. And also, they're mostly value-oriented indices. There's not a lot of big tech overseas. So when you buy international, you're really buying kind of more of a value tilt rather than a growth
tech
tilt.
Tickle my nips.
Yeah, that's an important point. You're diversifying across sectors. Right. Alrighty, so you guys have some good stock ideas coming up. And Carlton is taking a look at the key differences between the economy under Biden versus Trump. We'll tell you what they are when we return.
All right, beautiful report. Beautiful report. Let's get into this, guys. One, things are getting nasty with this whole political thing. Geez, I mean, are y'all watching what's going on with like Democratic and Republican parties? I don't like neither one of them. I mean, I'm just telling you, I'm a capitalist. Now, whoever is going to bring me the most money, hey, that's who's getting my vote. I'm just telling you off the top. My days of arguing over blue and red are done for. Which one of y'all is going to get me my yacht? That's what I want to know. That's who's getting my vote. That's just I'm keeping it because this thing be so frauded up and fudded up. It's ridiculous. But guys, nonetheless, just tapping in, just how I was speaking on the day before, where I saw this point up here, I was like, I want to do some more watching, but this was the previous video where it snatched up and you watched me have to barrel it down here and it still sprung back up. Guys, this thing is breaking out the band doors. They're trying to close in on this June 29th. We got some volatility coming, but like I said, that closing this Friday. Next week, I'm expecting green just because, like I said, we've seen this upward price move this entire time. Let's see if I can pull this out on them. We've seen this upward price move from when they barreled us the hell down, right? For 2 weeks straight. And I said this, all that was false. None of that was real selling pressure. And the simple fact of the matter is that it's got to come out. They're trying to make it to that 29th date. But again, that 29th is just a hearing. That's not the day that they're going to do the conversion. Now, things are going to get volatile as hell. And like I said, I'm going to be ready to play the arbitrage. I'm playing this as a play. If they call with that conversion, oh, you best believe I'm going to nickel and dime and get some money out that ape. If they don't, oh, baby. I mean, and guys, my expectation, they have to, because if they don't, I mean, the way that this play is going to snatch out the bando, it's going to decapitate hedge funds. Hedge funds that are holding treasury money. I mean, this is just, guys, the play is too big and we know it. We're seeing them having to cut and stall on a Binance to stop trading of ape coins that I didn't even know ape had a crypto. I knew AMC had the Brazilians and AMC coins that they sit up there trade. I said, y'all doing it with ape too? A company that has no value? It's not even a company. Just I don't even know what to call it. Now I know acquisition, but guys, let's tone in here. Look at here. Look at here. Short interest of the float, 22.62% going to 23%. Ironic, isn't it, how everything's starting to break out the band? As we mentioned in the previous video, I said something's breaking here. Days to cover are relevant, somehow going that, which is still right around the same point, 9 days to cover. It was at 9:30. But of course, we're up 2% going to up 3% on short interest when it was sitting at 20.51 for ages, just magically, right? Coming in, short exchange volume, you're reporting 51%. Well, look here. Look here. 0 shares available. Again, irrelevant to me. There was no shares available from Jump Street, but this just let me know how the crunch is actually getting. Something's going on here. Again, they're shooting all this stuff to dark pool, but we are showing for Friday 51.4%. As I told you, as we get down close to 50%, we're going to uptrend because they're sending 100% of this to dark pool. But the cue comes to this. The money is dried up, right? They expended a hell of money creating that synthetic barrel from the last 2 weeks. And the reason for that is the same thing we say. History might not always repeat itself, but it rhymes. Here we are coming up to that mid-June. Next week be queuing that mid-June week, right? Which is all lining up to be a positive week. We've dealt with the red. They have to release this pressure, and they're closing in. There's no way for them to just contest and hold this thing down at $4 for a whole month. We knew that wasn't going to be able to happen. I'm looking for green price movement, guys. Hold your pants on. Hold your panties up. Don't get them all in a bunch. We're not about to get overexcited. Like I said, June 29th is the real day of reckoning. That's what we're going to find out what the hell's going on, how we're going to play this. But one thing I do know is that we're going to be making our money over here. You hear me? This is a small thing, guys. There's no reason that you should have all your money sitting up in AMC and you're literally missing bukus of money occurring in these long-term names that I keep screaming. Tesla, Nvidia, Microsoft, Apple, XRP, Rumble. 2 suggestions. Write them down. I want y'all to take a look at them. And like I said, Path, which I've accrued. That's doing well. 2 suggestions. SoFi. Offering a 4.20% AP interest on your money, putting your money in SoFi. I see this company making moves, and they have good standings as far as the books and the money they're bringing in. They were at $4. They're at $8 now, and moving. Hold on. Just so y'all can see what's going on here. Just so y'all can see what's going on here. $5. I'm about to get ready to pick up some of these coming in next week. There's some very strong moves that can be done behind this because, like I said, a lot of people are moving their money from sitting at banks getting 0.00001%, when you can basically get 5% for your money just sitting in the bank like SoFi. It's an online bank, right? Which allows them to offer you more things. There's movement here. SoFi's been sitting in the background on my radar for a long time, but they've been proving themselves more and more. Another one, Netflix. I'm sitting back, standing, watching this. Like I said, I'm going to take my time with the investment on this, but like I said, they moved from 350 going up towards 450, same as how it is with NVIDIA. Netflix is not canceling, how everybody used to have 55 people on one Netflix account, paying for 1 month, it'd be $14. Well, they're stopping that now, what they call pirates, but basically they're making it to where they're going to only be one person per account, right? Which is then forcing people to buy new accounts, which is propping more money into their market, into their business. So you're having runs, and like they're saying, they're reporting they're supposed to be bringing in, I forgot how much money it was that they're supposed to be bringing in. It was a couple bill or a couple $100 million based off of revenue just from making that move. So you're seeing this price inflection. But like I said, I've already known cable's dead. Ain't nobody watching cable. What these kids watching? They got SpongeBob. They don't have any good cartoons. What y'all watching on there, man? Ain't nothing to watch on there. There's no cable's done. I haven't turned on my cable in years. Only thing that if I do even turn my TV on, aside from YouTube, would be Netflix. So that's something to keep on your mind. If you got the access, like I said, I know it's a higher price stock. That SoFi is a good move. That Path is a good move as far as long-term investments that are at a better price point. I could also put that SoFi into my gambling account as far as being a momentum trader, something that you hold for short-term. But like I said, I feel like that might be a decent move as we venture off into what we're calling this tech sector. Guys, pulling back in over here. Bum, ba, bum. Bum, ba, bum. As we mentioned before, y'all can miss it if you want to. You can miss the levy. Beautiful news on Friday. We had to pump to 230. I was like, what's going on here? Friday come through and we get I fully understand what's occurring here. Tesla surges 5% in after-hours trading as General Motors jumps on board with Ford, announcing their partnership with Tesla, North America, charging network assets and cutting-edge tech. The GM vehicles will soon be charging at 12,000 Tesla fast chargers using the adapter in GM's EV charging app. Plus, they are adopting a Tesla North America charging standard in 2025, saving $400 million from their $750 million EV charging investment. Tesla. That's a takeover, guys. That's the white flag. GM, General Motors and Ford said, we need you. You're going to take over. We want to be a part of it. So now all them EV Hummers and all that are going to be able to charge at Tesla chargers, which is putting more Tesla chargers out. Eventually, I bet you they start charging people like outside car entities that aren't in the initial trade. They use adapters to be able to use that Tesla charger and via the charging app, guys. This is big time money. There's no need for you to be missing this money sitting up here like this, guys. We'll see. There's no need for you to be missing this money sitting up here, guys. What are we not looking at? What have we not looked at? There's no need for you to be missing out on this money, guys. Absolutely no need. I'm giving you green bean call outs over here. I'm not messing with this. I understand, hey, because I was talking with one of our families, like I said, much love to everybody. Hey, y'all know I feel your pain. I was in the same boat until I had to go ahead and take that to cut that loss. Because and it felt like a emptiness inside. But like I said, I had to reallocate my funds. I was too overexposed in AMC and missing out on opportunities like this. And I started building a foundation for a long-term portfolio, 5, 10, 20 years. Set it and forget it. My yacht just building up in the background. I want 2 speakers and 2 go-go dance poles for 2 thoughts. I'm telling you, I'm already getting escaped out of my mind because this is the greatest generational wealth transfer that's occurring right now. With all the FUD in the market, the time is now to be going into investment. Same with XRP, Bitcoin, Ethereum. Guys, if you're tapped, what you shouldn't even be, if you need to be jumping into crypto again, not financial advice, but if you do, go check out the description, go look at the Ballot wallet, get you 5% off, it'd be $30. There's no excuse for $30 while you're not starting your crypto journey and pulling off the exchange. Because again, if it's on the exchange, not your keys, not your crypto, you'll be learning a lesson here soon, especially with what's going on with Binance and Coinbase, things like that, about keeping your assets on an exchange. That's that simple, guys. Listen, y'all boys know I love you. Much love for all the sports. You know, we're going to keep coming back with bangers, call-outs, money, because like I said, it's the money team, it's the money mafia. Y'all write these names down and y'all keep an eye on them as well, just so y'all can see if he's like, oh, hey, this man actually is dropping off some dimes, because I'm a dimer. I'm like a point guard. I'm trying to hit y'all with the assist. That's all I'm trying to do, guys. But much love. Y'all already know what's next, don't you? Excuse me, hey, do you know what's next? Yes, sir!